Hello, I'm Phillip Wale and welcome to the half-year results for the 6 months ending September 2021 for the WHI Group. Let me start by looking at the financial highlights, where I'm pleased to say significant progress has continued to be made despite the pandemic challenges. We see group revenue in the period up 38% to £17.5 million, but that's versus a figure of £12.7 million this time last year. Our underlying profit before tax is up 70% to £1.1 million, again from a figure of £0.6 million this time last year. That brings us to a profit before tax figure of £0.3 million versus £0.5, and an underlying earnings per share figure of 1.87, up from 1.32 for the period last year. All of this has helped increase our cash balance, which stands at a healthy £8.4 million for the period versus £5.8 for that period last year. This, of course, contributes to the all-important regulatory capital solvency ratio, which stands at 18.4%. If I can focus on some operational highlights, we've had 9 new corporate client wins to the end of September 21, taking the total number of corporate clients to 86. I'm also pleased to say this momentum has continued since this period and currently stands at 90, well on the way to our target of 100. During this period, we've completed 20 transactions. That includes 4 IPOs, and we've raised total funds of £193 million, significantly higher than this time last year. During this period, net new discretionary funds have also grown by over £43 million. Our total assets under management are up 36% to £1.32 billion, and an all-important discretionary assets under management figure up 67% to £1.16 billion. We've also successfully completed the acquisition and transfer of the Harpston assets. So if we look at wealth management and the continued growth and improvement of that division, following the acquisition of Harpston, we've seen revenue up 27% to £7.8 million. We've seen a growth in discretionary assets, both organic and through acquisition, of £460 million. Importantly, the quality of earnings has also improved, with an increased proportion of our revenue arising from management fees rather than variable transaction income. The division is now operating near break-even, and we have good visibility on the pipeline for further acquisition opportunities utilising our existing fixed cost base. I'm pleased also with the success of the capital markets division continuing to strengthen its position. During the period, total revenue has grown over 50%, with a 10% growth in retained income. We've increased our number of clients, as I've said before, and that currently stands at 90. During this period, we've completed 4 successful IPOs, and we've continued to make investment, hiring experienced people within the climate-aligned capital and healthcare sectors. We've also seen investment in our private growth capital sector, with the recent relaunch of our investor forum, which has seen nearly 300 high net worth members join. So a reminder about our strategy and outlook. We've made good progress in the wealth management division with the acquisition of Harpston. We're now focusing on improving the margin, and as a reminder, our target remains to have £3 billion of discretionary assets under management with close to a 20% margin. In capital markets, we have seen a continual improvement in its franchise. We've won more clients, we've had strong performance in the IPO issuance we've done, and with the money we've raised for our existing clients. We've also continued to build our private growth capital offering, and we're still aiming at a target revenue of £20 million for that business. So looking at current trading and our outlook for the second half, following the good start we've reported today, we expect to see continued momentum in both sides of the business, albeit what we still believe to be quite challenging markets. I'd like to thank everyone for listening today, and we look forward to bringing you our full year results in summer next year.